In 2021, Nigeria continued its tax reform effort by building on the foundations laid by the Finance Acts of 2019 and 2020. The Finance Act 2021 was signed into law on 31st December 2021 by former President Muhammadu Buhari and took effect from 1st January 2022. This act introduced over 40 amendments across key tax and regulatory laws with the aim of clarifying ambiguous tax provisions, adapting tax laws to emerging business models, especially in the digital economy, addressing sector-specific realities following the Petroleum Industry Act 2021, and broadening the tax base through new levies and enforcement tools. Some key legislations amended include Companies Income Tax Act, Capital Gains Tax Act, Personal Income Tax Act, Value Added Tax Act, Customs and Excise Tariff Act, Stamp Duties Act, Insurance Act, Nigeria's Police Trust Fund Act, NASENI Act. In this video, we will break down the key amendments introduced by the Finance Act 2021 and explain what they mean for businesses, digital platforms, investors, and taxpayers across Nigeria. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of TaxMobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. Let us consider the major amendments under each tax law. 1. Capital gain tax. Tax on sales of shares. A 10% capital gain tax was introduced for proceeds that exceed 100 million within 12 months. However, proceeds that are reinvested in Nigerian shares within the same year are exempted. Other capital gain tax updates include securities lending transactions remain tax exempt. Gains from federal government securities are still not subject to CGT, and CGT returns must still be filed twice a year, on June 30th and December 31st. 2. Companies Income Tax Act. Insurance sector. Tax rules for life and non-life insurance businesses have now been clarified. Also, actuarial revaluation certificates must be submitted within 3 months. Educational institutions. Educational institutions of public character no longer exempt from income tax. Petroleum companies. Export profit exemptions was removed from companies in upstream, midstream, and downstream petroleum operations, aligning it with the Petroleum Industry Act 2021. Non-resident companies, digital significant economic presence. Non-resident companies with a significant economic presence will be taxed on a fair, reasonable percentage of turnover if actual profits cannot be determined. The FIRS will decide what percentage is fair. Capital allowances. A proration rule was introduced, which means only capital allowance linked to taxable income is claimable. Also, SMEs that are not enjoying pioneer status will have their unutilized allowances deemed consumed annually. Minimum tax. The reduced minimum tax rate of 0.25% has been extended for the 2021 financial year. Unit trust. Interest earned by unit trust holders now subject to final withholding tax. Customs and Excise Tariff Act. A new excise duty of 10 naira per litre has been introduced on non-alcoholic carbonated and sweetened beverages. 4. Federal Inland Revenue Service Act. Third-party technology use. FIRS can now deploy technology to access taxpayer records after giving 30 days notice. But if access is denied after the notice, a 25,000 daily penalty applies. Banks reporting penalties. Failure to provide accurate know your customer or customer information by banks now attract a 1 million naira fine per quarter. Personal Income Tax Act. Insurance premium deductions. Only life insurance premiums on the taxpayer or spouse qualify for tax relief. Increased penalties. Failure to file returns now attract an initial fine of 20,000 naira upfront, followed by 2,000 naira for each additional day of default. Tax defaulters may also face up to 6 months imprisonment. Banks reporting duties. Banks are now required to report new customer details quarterly to the relevant state tax internal revenue service. Stamp Duties Act. The Minister of Finance is now empowered to regulate the distribution of electronic money transfer levy and stamp duty arrears with the approval of the National Assembly. Tertiary Education Trust Fund. The Tertiary Education Trust rate has increased from 2% to 2.5% of accessible profits, and small companies remain exempt. Also, the payment is now due within 30 days of assessment. Value Added Tax Act. Non-resident companies and VAT. Non-resident companies may now be appointed as VAT collection agents. FIRS has also been given the authority to appoint other agents to withhold and collect VAT. Upstream petroleum companies. They must comply with VAT obligations regardless of their turnover threshold. Insurance Act. The definition of capital has been expanded to replace paid-up share capital with a broader capital requirement definition that includes admissible assets. Nigeria Police Trust Fund Act. FIRS empowered to collect the 0.005% Police Trust Fund levy. NASENI Act. A brand new NASENI levy has been introduced. Companies in sectors like banking, telecoms, ICT, aviation, maritime, and oil and gas must now pay 0.25% of their profits before tax. This applies to companies with an annual turnover of 100 million or more. In conclusion, the Finance Act 2021 introduced significant changes that affect a wide range of taxpayers, especially SMEs, educational institutions, oil and gas companies, non-resident digital companies, and financial service providers. To stay compliant and avoid penalties, businesses must now reassess their tax obligations in light of the new amendments. There is a stronger emphasis on timely filing, proper documentation, and VAT compliance, with increased fines and stricter enforcement measures. Finally, taxpayers should closely monitor future updates from the FIRS, especially regarding deemed profit rates, VAT agent appointments, and NASENI Police Trust Fund implementation. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.